Hi traders, Richard here, and in this video I want to share with you a common pitfall that newbie traders tend to fall in, and that's called analysis paralysis. Now, what do I mean by that? On this chart in front of you here, you can see that I've probably added about 6 or 7 different indicators overlaid over my actual price chart. What I mean by analysis paralysis is that new traders tend to want to use multiple different types of indicators that potentially assist them in making better trading decisions. Obviously, we all want to have winner traders. You want to get in the right time, the most opportune time, and also potentially get out at the best time possible, right? The thing is, though, that the more indicators you do use, the probably more cluttered your chart's going to get. A great example on my screen over there, and it's actually going to hamper your concentration or potentially your focus. A lot of mistakes that traders also make with this is that when they do actually add too many indicators onto the charts, is that they use indicators that basically either tell them the same thing or they also potentially contradict each other. Now, there are 4 categories that indicators fall under, and you probably already know that there are literally hundreds or thousands of them out there. But typically, you're looking at momentum indicators, your trending type of indicators or trend indicators, volatility indicators, and then you can have stuff like support and resistance type indicators, right? So when you do start off, I think it's a really good idea to potentially first start to figure out what type of trader you want to be. And that could be the trading strategy or style that you want to pursue, whether that's swing trading, scalping, or whatever the your style might be that suits your personality. And then go look for indicators that would fall within that strategy. Now, there are literally too many to actually go through in this video, but if, for example, you're looking at momentum type indicators, a very, very popular one would be your moving average conversions, divergence indicators, would typically show you what if market is basically losing momentum or picking up momentum. You get your relative strength index shows overbought and oversold conditions. Again, I just loaded these on this chart here on the bottom panels over here to basically show you that. But on the top panel over here, I've just went ahead and loaded multiple different ones. Crossover strategies, Ishimura clouds, Bollinger Bands, and all those kind of things. So when you do start trading off, it's potentially best, like I mentioned, to go have a look at which indicators will benefit you with your strategy. Maybe just start adding one over your price action at a time. Study what that indicator is trying to tell you. Maybe look at historical data. Go back in your charts, whatever time frame you want to be looking at, and see how that indicator would have potentially helped you or signaled for you to get into a trade or out of a trade. All right, so that's what I mean by analysis paralysis, potentially just having too many things on your chart. So that when you're actually looking at a chart, your eyes start getting red. You, at some stage, don't even know what you're looking at anymore. Just too many colors, and the visuals are just too much for your brain to handle. All right, so that is what I've been trying to say about analysis paralysis. The other thing I wanted to mention is that typically your more experienced traders will start off with a lot of indicators in the beginning of their trading careers, and towards the end potentially just have 1 or 2 or 3 of the favorite that they actually use to get in and out of trades. So it is an actual thing that the more experienced you become, traders tend to look at less and less indicators and rely more on price action, and then potentially use indicators to help them get in or out of trades, give them those signals to get into those sweet spots where your risk is potentially at its lowest, or when you think market's going to immediately move in your direction, potentially also help you to get out of trades. Right? Again, I can't tell you exactly which indicators to use just because there are so many out there. But a lot of traders skip this and they actually just want to jump into the charts. They've read somewhere this is a great indicator, or they get sold an idea by someone else that created a new indicator that this is going to make you lots of money. So use this indicator. It could potentially make you lots of money. But again, try to stick and focus to one thing. This is also another common pitfall that traders experience, is that they they tend to jump from one strategy to the other without giving sufficient time to see if it actually works for them, whether that's under real market conditions or whether they backtested these indicators as part of their strategies. So, do your homework is what I'm trying to say here. Maybe start getting used to just overlaying one indicator at a time and see if that would actually work for the strategy that you want to implement in the markets. Another quick tip that I can give you before I finish off this video is that um, using stuff like price structure, understanding how markets move, looking at different price patterns, those sort of things. We just get rid of some of these indicators over here. Let's delete them all. Can really, really assist you to get a really good feeling of what a market could potentially do. We had a correction here. Maybe this was a bit of a triangle. You're potentially all familiar with your flag patterns, triangle patterns, and whatever different analysts might call them. But also just looking at price structure, how price tends to behave during reversals. Price structure breaks might indicate when a trend might be coming to an end. Higher highs, higher lows. What defines the uptrend? What defines a downtrend? And then slowly overlay indicators over that to potentially help you with your trading decisions, getting in trades, getting out trades, or maybe just trying to read better from a technical perspective what the market or price action is actually doing. Is trends getting exhausted, running out of momentum, that sort of things, volume picking up. There's so many different things that you can work in from a technical perspective into your own trading plan. But as I mentioned, it is really, I wouldn't say it's a fact, but I just discovered this, my personal journey, that I started with too many indicators. Eventually, I didn't know what I was looking at anymore. And then I started slowly, using the ones over the years that really benefited my strategy. So I typically trade a type of a swing trading intraday strategy. So I day trade that. I don't hold overnight positions, but I'm a big fan into following price action. Firstly, are we in a trend? Are we, what's the trend on the higher time frame? What's the trend on the lower time frame? That sort of thing. And then using indicators to help me with my trading decisions. So the more you study price action, again, I'm not saying you should be doing this. I'm just saying that it's a good place to start potentially as a beginner trader to learn more about price action. So it gives you a really good, how can we say, a stomach or a feel or gut feel as to what price action might be doing next. All right, no issues, no problems using indicators at all. Again, I'm a big fan of using indicators, but I don't use too many. You could potentially use as many as you want, and that's really up to you. But as I'm saying, try to avoid analysis paralysis. Try to keep those charts clean. In my opinion, that's a really good place to start. And if you do want to add more and more indicators later stage, indicators that actually work together rather than against each other, then that's perfectly fine. All right. But don't just go and say, oh, this is a good one, this is a good one, this is a good one. Go and select it from a very large list and just add them to your chart without actually knowing what they mean. Right. So go study those indicators, which settings are potentially going to be the best to use under for your strategy. If you want to be a scalper, maybe you need to reduce some of those settings. Again, trying to just go into settings, I can probably chat about that for ages and ages. But go do some homework, take things slower, and then gradually add those indicators until you find the ones that actually work for you the best. All right, so hopefully these tips helped you out. Again, analysis paralysis is something that is a real issue. So, as a beginner trader, as I mentioned, may take things slow, add those indicators slowly, try to get a good feel of what price action is also doing. Studying patterns and those sort of things, combining those with indicators is something that, in my opinion, really, really works well. So hopefully those tips work out for you guys. If you are struggling passing a prop trading firm or challenge, then maybe this is something you need to consider and go study a little bit more before you take on the next challenge. Anyway, thanks for watching. I'll see you next one. Take care and goodbye.